Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's April 28th. This will be our chart lesson for today, and really it was a tight range for the day. It was actually a pretty good trading day for a range day because your support was very consistent down here. We broke out one time here, but the rest of the time we bounced at a consistent point all day long. We did have a little bit of failed breakout up here before we got back in the range and headed lower. And then once we did break out successfully, your measured move for the size of this range would be this line here. And you can see we went pretty much right to it, turned back down, and came back down and ended up back inside the range again. So today was an FOMC announcement day. This is a pretty critical day. When you see this announcement, you can see it up here at 1:30. Actually, it's at 1 o'clock. There's a press conference at 1:30, but really the announcement of the rate comes out at 1 o'clock. And you can see that's generally I tell people to be flat an hour before. So this blue box starts an hour before, and I ended it about where it looked like prices were getting back to normal. You might have waited a little bit, another bar or two, but by here things look pretty normal. And here's the interesting part. Even though prices went kind of haywire here at the announcement, the price action still works. It broke and went a little further than you might have expected on the failed breakout, but it comes back, breaks out the top, and then we're just kind of back inside the range. So even with the news, the price action still works, and that's the beauty of it. It tends to work no matter, even during a news announcement. So that was pretty interesting, I thought. I can show this to you over and over for years where now there are some times where this thing goes completely haywire and then takes off on a long move one direction or the other. But generally when that happens, it's because the market was caught off guard with a rate increase or a rate decrease or something of that nature. Today the Fed left the rates unchanged, so not much, but still you see there's some craziness in here for a few minutes, 15 or 20 minutes, and then we're kind of back to normal, and market takes off up to the upside, moves about a measured move, goes a little bit higher, and then drops like a knife right back and resets. And you'll see that over and over. If there's a big move, generally because of a news announcement, within an hour or so, it usually takes it all back and resets at the same place. I see that over and over, and this is about where we started right in here. Notice we came back and reset, and we actually closed up from yesterday. We closed right in here yesterday, and we closed a little higher today. So the market actually closed up. But let's zoom in a little bit and go through the trades. It won't take long today. There's not a lot of them. There was a clear and obvious range early on. 7 o'clock came just as we're making this double bottom here, and we start working up. And notice that low, and you try to go short once, you push up through the EMA, and you try to go short twice. It fails. That's a failed second entry short right off this short-term key entry point, and you're looking for prices to go higher again. Quick, easy move. It doesn't actually get all the way back to the top, but I like that setup. It's quick, easy scalp, and then of course we drop back down here and we just start bouncing. There's a nice signal bar here, but there's no rejection there, so don't try to enter that. And then you finally bounce. You get a first entry, you push through, you come back, you get a second entry. Normally I'd be a little leery of that second entry, but it's right off this key entry point. Just adjusting this a little bit. I think I originally had it like that. Somehow I've gotten it off there a little bit. But there's a clear failure right there, and it's right off. This key entry point is probably not confirmed at that point. And it actually may be that the key entry point started from here. This tends to fit pretty well, and this is how I viewed it. So it's something to look at. But there's probably a shorter term one up through here is what I'd start off this point right here and get you this short term one. as well. And then you see a break and new high, and then you get a correction. And that's after the breakout as well. So let me make this a little smaller. Okay, but anyway, a failure. I like going long right there, and you probably would have got a runner here and could have ridden it all the way to the top. And then we get a break of this short-term one, move to a new high, and then we're working back down again. But notice the range, we get a breakout, so it's probably going to fail unless this channel wins out. It looks like this channel is going to maybe win out. And notice you got a new high, and you get a first entry, and then you get a second entry right here. Unfortunately, that's very congestive, very sideways. There's not much room to the highs. I think to that close right there, it's exactly 5 ticks, so it would have been a 4-tick failure on you. So I marked this one green because you could look at it as a failed second entry short and a second entry long. But if you enter this, you have to use a limit order and get a little better entry. And it would have worked, I know, because I took this trade myself. And I was real hesitant about it, but I said, hey, I'm going to try a limit order. We'll see if it comes back. And it did. Filled me almost perfectly to the tick. And I was out in a minute, and I was glad I did it that way because otherwise I would have had a failure. And then prices are coming back. The only reason I like this trade, because generally you want to fade a breakout. In other words, when the prices break out to the long side, you want to go short. Or if they break out to the short side, you want to go long. That's what a fade, that's what I'm talking about when I say you fade a breakout. But in this case, you just didn't have a whole lot of room. It was a range day and most breakouts fail, but there's a triple test right there. And those don't fail very often. Generally, when you see a triple test, if it would have been a little stronger trend or a bigger range, I might have said made that blue and said go long. But because of that congestion, anytime you see 3 or more bars stacked side by side, at least one of them has no body or a very small body, that's congestion. And you can clearly see that congestion. That's a warning sign. Be careful going long here because you might get burned. So anyway, the breakout does fail. We get back inside. There's a second entry long here. I didn't mark this trade, but you can clearly see that high. Technically, it's not a new swing high, but it's close enough to be a second entry. And you can see the 2 legs down, but it's not real. It's not a perfect second entry because technically that's a lower high. That's a lot of sideways stuff there rather than really a break higher, but you can clearly see 2 legs down here. So, and you are a little piece away from the EMA, but this good thing could drop all the way down. So I didn't mark this trade, but it's one that you could probably argue to be green to go long on that second entry right there. And it would have worked easily. And then we just notice we come up here and we test the breakout back as we test the original resistance of the range. We come back, we test it twice, and then we test it a third time right here. I didn't mark this one red because there's a lot of congestion here, and we made a new high right there too. So we could push up again. You're probably better off to wait on a lower high, but there's reasons to maybe take this trade. You can see there's just a lot of congestion there, and there's not much room. It worked. We made a new low. We come back and we make a lower high right here. We actually make a lower high here, but it's a lot of sideways stuff. So when it comes back and it tests that breakout again and gives you a second entry short with the nice bearish bar, I like going short there now. This one's a little iffy because, again, you got 1, 2, 3 bars stacked up. This one has no body or small body, and so that's congestive. Again, it's congestive here too, but when you test something that many times and now you got a lower high right here on a second entry short, and that's a new high, first entry, and then second entry. So that's a failed second entry long as well. And that's just a nice signal bar. I like going short there. And I actually took this trade as well, and I recorded this one and I posted it. So if you haven't seen it yet, you can go watch it. It's on the YouTube and the site. And it's just again, it's a second entry short, back inside the range after we've tested this thing. Once you test something that many times and it fails, it's probably going lower. And I really was hoping I'd catch a runner all the way down here. I didn't, unfortunately. It does continue to go lower, but I didn't get a runner on this one. But you got a new high. You try to go long once, twice. This doesn't actually break higher here, but there's a new low, first entry, second entry, and you can clearly see that trend line, the EMA. Nice signal bar, very small, low risk, 3 ticks. You want to go short on that one. You might have even considered going short here. It comes back to the key entry point again, and you can clearly see prices are just easing down. It's just they're just in no hurry. The market's very slow right now. So if you took that one, it's just the first entry is the problem. But you do have the trend line, the EMA, and we're steadily making lower lows and lower highs, and it's very choppy like. So there's a good chance this is going to go lower. Here's your measured move based on this first move here. But generally in a case like this, if we keep come this low, we'll probably come down and test the lows again. And we actually went a little further and had a failed breakout. So you might take that trade. I'm not going to mark it, but if you took it as knowing that it's aggressive, I probably wouldn't beat you up over it or be mad at you about it. I'd probably say, yeah, it was probably worth the risk. And this one you could have entered either place. I actually like entering on this one because this is basically giving you, it's had 2 chances to go lower and didn't. And so this one still, it's a little bit early, but you can clearly see we tried to push down a few times there. And the key is it's a failed breakout. Plus we're on the other side of the trend channel. So we're overdue to go up. And you'd probably want to put this trend line on there, which I don't have. And so you may take that. It's aggressive, but so you're better off to wait on the higher low, and you just never get that. And let me make a comment here. When I say that, somebody actually posted that in the forum. I said, but you didn't get a higher low. Well, yeah, there's a higher low right here, but it's not one you want to trade. So that's what I mean. If I say there's not a higher low, it doesn't necessarily mean that there's not a bar that sets up as a higher low. It just means there's not a trade for a higher low. So you have no entry right here on a higher low. You don't want to enter way up here because that's all one move up, and you may get 2 legs of correction, which you do before you go higher. This looks sideways, but it's still 2 legs. You can see we came down, went back up, came back down, and then went up. So there's 2 legs of correction there. Again, there's a first entry and then a second entry that fails, but that's just too congestive. Right in the middle of the EMA, you're getting real close to noon, so just stay out right there. And again, from noon till this thing settles down, no trades. And so this starts right at noon. Don't take anything in here. You can see why, because you just don't get, you could get stuck. I've seen it start doing this and go sideways all the way to the announcement. And then you're stuck there. Then you can't get out because prices aren't moving. If you were short, you'd have been okay here. And if you were long, you'd have got burned. And then, of course, the announcement comes out and things kind of go haywire for a little bit. But by right here, you're really kind of settled down. I included that in the box. I made that green. I mean, by this time, you might take a trade. And you can clearly see we made that low. We tested it once. We tested it twice. You got a nice little bullish bar. It's a little bit congestive. It's still inside the, it's only been 13 minutes since the FOMC announcement. So it's a little aggressive, but you might take that trade. We make 2 legs up. This one's tempting to go short, but I wouldn't take it. It's too big a chance we're going to the highs. But when it comes back and makes this low right here, there's actually a hidden second entry. You move down, go up, move down. So there's a hidden second entry. But more than anything, it's just another test of these lows. And there's a little room back to the EMA. So I like taking that trade. It's close to being green. You could argue for it to be green, but we've consistently bounced here all day long, and you can see that. We had this failed break lower, but consistently off that blue line, we bounced all day long, and when we did break lower, it failed. Even during the news item, it failed. So there's a good chance you're going to at least go back to the EMA and probably to the other side, and as you can see, if you catch this one trade, boom, it takes off, and you probably get a runner and ride this at least to the highs, and you may, as long as that trend line stays in play, you may stay with it. So this would have been a nice runner here. And we run up here, you get a break. Notice we get a break and actually 3 pushes up to that measured move. And if you've got a little better signal bar right here, you might have risked a short going back to the EMA here because you're way overdone. It's a measured, it's a measured move of the range. And that's what this line is. It's just the width of the range starting here, a measured move. But if you're just patient, a few minutes later, you get a first entry long, second entry long, it fails, and it gives you a nice bar. Just go short right there. This was an engulfing bar. I'm actually not sure if it broke higher or lower first. I would wait for that bar to close and then go short below it. And if it broke lower, you might have gotten fooled right there. But anytime you enter on an engulfing bar, you have to put your stop on the previous swing. So your safety stop would go over here if you entered on this engulfing bar. But I'd just wait right there to be sure that we're not going to go higher. And if it breaks below that bar, then there's a good chance you're going lower. And you'll probably get at least a measured move here. And which is, notice when we pushed through there, we didn't come back and test this. So prices are going to come back and try to test that previous resistance and see if it acts as support, but you can see it didn't. And when everybody realized it's not going to hold, they all piled on. This is in 2 o'clock, so none of this matters. And then of course we bounce at the lows again, and we go back to the highs, back to the lows, back to the highs. Or now you could consider this is maybe a midline. And so this was one of those days where it was rather consistent on the lows, a little different off the highs, but everything that broke out failed. And so they were great trades. I like these kind of trading days, actually. When you get a consistent range where prices consistently bounce at the same places, that's like, it's easy money. It's on the days where every time it comes down here, it makes a different low. It's either down here and then up here and then back down here and then way up here. That's when it's hard. When it's consistent like this, and your breakouts generally fail pretty quickly and are good setups to go long. And same thing up here. I mean, we just didn't get as many opportunities off the high, but good trading day, really. If once you get used to how these ranges operate, and you learn to understand what prices are doing and how they react, these are pretty easy days to trade. I like them but they have to be consistent again. So that's the difference between a hard range and an easy range, is that an easy range, the price reversals are always consistent, and on some days they're not. And some days you get ranges like this is a bit of a range, but look how prices are not turning consistently at the same place. They're down here, then they're lower, then they're in here, then they're way up here, then they're here. And it's just not real consistent like it was across here. And so that's the difference. Here's a range day that's not, notice how you're just bouncing in different places. You got a little consistency right there. But nowhere else did it bounce consistently. Those are much harder than a day like this. So I hope that makes sense. Hope that's clear. But anyway, the only other thing that I wanted to mention is our second entry indicator. We're going to release that one day this week. We're shooting for Friday. So I think we have everything ready to go, barring no wrenches in the spokes. We'll be releasing that probably on Friday sometime. So we want to try to release it before the weekend so people could play with it over the weekend and look at it. And so look for that. There'll be a link to where you can purchase it on the front page. There's already a little purchase button, but it just says coming soon at this point. When it changes to say Pat's second entry indicator, buy now or available now or whatever, then you can buy it. As long as it says coming soon, it's not there yet. You'll just if you click on it, it won't take you anywhere. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. And believe it or not, another week. Tomorrow's Thursday. We'll wrap up another week. But I hope you had a good day. We'll be back again tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next